All right, guys, welcome on. Giving you all a chance to get in. Welcome, everybody. Get yourselves in. Get yourselves in. All right. Let's see. Get yourselves in. All right, people. All right, so let's kick this off then. All right. So we can see that the market is showing some very interesting signs now. USD from the analysis I gave to you all, the price has reversed as required for us to see the next movement happen. Now, if we just go back to the daily structure here, again, remember, this area was operating as a demand zone and then as a supply zone after the break. Price was used as supply all the way throughout April until we got to this period in September. Now we've had a close on Friday here, which on Monday we should expect a reversal, which we've had now. I missed the entry for the long. The price got there just before I could get a chance to get in, but the price has reversed back to where we need it to. And we should be looking for a launch on the long here that would take us where we are, up to where we discussed on. Now, if you haven't looked at the weekly breakdown, we've just started them back, but the weekly breakdown again gives us all of the major, well, gives you and gives us all of the major currency pairs and what they most likely will do for the week. So we can have strategy for us to be able to approach the market with good confidence. So please check that out. Okay. If you're not too sure what I'm talking about right now, it'll be really good for you to go and check that out. So please do. Make sure you put a thumbs up, subscribe to us, show us some love. As we get to 1 million followers, that's the aim, and we're going to get there. All right. So most likely by Wednesday, Tuesday into Wednesday, we have the FOMC news coming out at 7 o'clock GMT time on Wednesday, which should push the price to this supply zone here as the next target. Now, since the price is reversing in this manner, I'm just really waiting for the price to get back down to the regions where we can get in for a buy. But I do expect the price to reuse these order blocks here and give us a long scenario. Now, USD CAD has shown up and shown out. So what a brilliant move today. So we've seen, and I'm going to put the markings here. So we've seen, as I described yesterday. So if you took this, well done, the price gave us a very strong bullish run. We had a very strong H4 close here on the previous session, and then we had the final close to end the week with a H4 body close above the previous high. Now into the market coming on Sunday, we had an immediate continuation long from that very strong bullish pressure, and we've ended the market highs for now, with the price returning back down a little bit from returning to this supply zone, which I always expected the price to do. USD CAD to produce a short, as I was discussing, it might for this region here. Now, if we capture this short as it's supposed to go another potential long, and the price may even drop further. So I'm really intrigued to see what's happening. And I will look at the oil market to see what's going on in that section and check out gold also. So USD CAD is performing quite well. So I'm going to shift the focus because we're seeing a lot of things across all of these pairs, USD CAD, USD CHF. USD CAD and USD CHF are behaving differently. Okay, as you would expect, I've told you that if you rule 101, if you want to trade Forex, don't try to use USD CAD as pair correlation with other US dollar pairs because they do not move the same. They have different fundamental driving factors that contribute to how the price behaves. So please make sure when you're doing that, don't get yourself caught up in that. All right. So I'm going to switch over. Let's have a look at gold now. In this situation that we have going on with the Evergrande situation, things are starting to heat up quite strongly. And again, on the note of strongly, I would really strongly suggest that you lock yourselves in and start to really study what is going on in the markets. Now, I'm going to provide you some infrastructure here and some tools that you can go for. But let's have a look at the dollar index first of all. So we've seen a massive increase in the dollar index today. And specifically today, the price has shown very similar shape to what we see on USD CHF here. Same kind of price action on the short. All right, so the US dollar has gained some strength since we've last looked at the dollar index, and the price has reached now close to the high that we saw at the last week of August. We're not there just yet. Now, from the structure of price here, it looks as though we do have an opportunity. I still believe in the short. Now, I will explain to you why very quickly here. If you're not too sure why I still think the short should happen. In terms of how the price action is operating at the moment, this weekly zone right here of supply hasn't had a return onto the other side. So there's a large pool of orders here on the weekly time frame that the market will need to go back and fill. Now, there is a chance that the price may not fill it now and fill it later, but I'm looking for this return back here because we didn't have it when the price spiked back down right here. So on the dollar index perspective, I do see a short coming before a long. And when the long does happen, I believe it will be a fantastic one. The only thing, as we've been discussing, and take this as a case study that's holding the price, would be this supply range here. Once the dollar index breaks out of this supply range, we will see some very strong increases in the US dollar strength. Okay. So I'm very poised to see what we are going to have moving forward. So I would advise for all of you just to keep your eyes peeled on what's going on. Keep your focus on what we could see going forward, and let's see what the market does from there. All right. So let me just put this out here for you all. So let's go. All right. So when I'm looking at the price action here on the dollar index, and I go down to the daily time frame here, the price is still within a reasonable area of supply at the moment. If we have a close above this supply zone, then I would suggest the price will continue pushing further long. But at the moment, from what I can see, it seems as though the market is looking to reverse from this point. And so I'm going to keep my marking here. How the price behaves today would really, and tomorrow also, really determine what we do. I'm still looking for this long. I see a pool of liquidity here that the price needs to go for. And I'm looking for a $91 price on the dollar index. So if the price does what I believe it is going to do, then we probably will be seeing a very strong short. At the moment, the price is quite stable for now, but I'll be looking into this as time goes on. You know, the price structure is looking bearish to me for the short term anyway, but we'll see how far this goes when it comes to how the price is behaving here. Now on my H4 here, I'm going to mark this out. Can you guys see this H4? I talked about this H4 area before, and look at what the price has done. It actually has come back to it. So on the H4 here is not the nicest price feed, but just about. We've seen that the H4 candle is closed within this other side. So we have a flip zone reaction here, which means demand has become supply. And we've had the kind of reversal signature. So this will be a very good scenario or set of scenarios to allow the market to produce this short that we should be expecting. So I'm going to be looking to short USD CHF this week. For how long, we'll see. Depending on how aggressive the price is, we can determine what we're doing with that. But in the meantime here, I expect to see quite a strong bearish move. Okay. So let's continue here. All right. Now, looking at what we have going on, let's look at what gold is doing. Some pull gold up here. All right. So when it comes to gold here, gold has been in an interesting place. We've had very strong shorting take place on the pair. I've told you guys already that when inflation increases, the first thing that happens is that we have a price spike, and history lets us know that in the first initial thing we have is a price spike and then a very strong short. And the very strong short is a discouragement from central banks, primarily of investors who are hedging their or trying to protect their wealth with gold. Okay, that discourages them, or not them, but discourages people from investing in gold and trading out the currency, which is devaluing, for gold, which can protect them from currency devaluation to a very good degree. Now, looking back over the history of price action here, I will do something with gold here for you all to see what I mean by this, to show you the pattern in history here. So I'm going to have to use TradingView because there's not enough price data to actually demonstrate this fact. Let's put this here. So I'm going to open up gold USD. Let's have a look at what we have going on. All right, so follow me, guys. I'm switching over here. And what I'm going to do is just simply use the monthly time frame because it helps to describe what I'm about to explain, and we can navigate quite well over here. So let's look at the history of this. So I'm going to start all the way from when the price feed was first being able to be shown. All right, so the price was very stable around $33-$34, and this is due to the season that of time we were in. During that time period, in the 50s, 60s and stuff, we had the Bretton Woods system in play where gold represented a certain amount of dollars, and then the dollars were used for international trade by different currencies as a form of receipt of the gold that they earn or they spend in terms of import and export shipping. So when the global economy was restarting after World War II, this is where we found ourselves. So the price was quite stable during that period of time, and it was roughly around about, I think 1 troy ounce. Yeah, 1 troy ounce of gold was about $33 on average, 33 to 35. As time went on, we see 1970, and then we have the famous 1971 to 72 period. Now, in August of 1971, August 15th, President Nixon, okay, put a stop to, or a so-called pause on, in essence, exchanging gold for dollars and vice versa with other countries. Now, the reason for this is that during this period of the 60s, we had the Vietnam War. And in essence, the US was spending more money than they actually had in gold. And the first country to catch on to this was France, and other countries started to catch on too. And so they lost confidence in the system in play. Now, you have to remember there was over 700 allies of the United States in the Bretton Woods meeting in 1944, okay? And so what we see here in history is the breakdown of this fiat currency system that was taking place. Well, and this is due to overspending. This is due to greed. This is what happens. The government was literally spending more than they had. Okay. And because they had the money printer, they were secretly printing more dollars, hoping that they can make up for it. But they got found out. And so before things could go pear-shaped during the reign of President Nixon, he paused this system of exchange of gold to dollars. All right. When that happened, we see what happens next year into 72 and beyond. We see a very sharp increase in the price of gold, very, very sharp. We see the price going from these lows. So let's say the beginning of 1972, around about $49. By 1975, we saw that the price had gone all the way to $194, dropped back down massively to about just less than $100. And then we see this massive increase over time. So 78, 79. Now, what's happening here? Well, because currency, in essence, was not backed by gold, or there wasn't a gold standard system with the dollar backed by gold, what we saw is that currency started to devalue and gold scarcity increased even more. And aside from that, because of this system that we saw in play where gold was not, backed by the US dollar. Now the US dollar was backed by other things. It caused a massive rush for investors, especially the rich, to buy gold instead of holding currency, okay, because they knew that their currency will devalue over time as more currency is being printed. And this is what we've seen. So we saw a sharp spike all the way up to almost $900, 872 by the 1980s. And this is during the period of one of the financial crashes in the 20th century, a major one. Then the price descended. We saw the price get down to lows of like $281. And then we move forward in history. So again, the price cut starts to stabilize and gently makes its way down. And we get down to around about 1999, 2000. Now, during this period, 2001, 9/11, 9/11 was the moment where the Federal Reserve had to step in again quite strongly to quell the situation. And what happened? In this period of time, the interest rates were dropped twice. So we had what we call a double cut. And that double cut in interest rates made, the US dollar cheap to borrow money from, or it was cheap to borrow US dollars from the United States. And so that caused a few issues. If you were holding dollars and there was money being printed out, then you would have lost value on your dollar. So as a result, gold was put in place by many as a replacement. And so we saw a massive increase in the amount of gold, and the price of gold spiked all the way up to the all-time high that we knew of 1900. Now I said 1800 yesterday, but it's actually 1921. It was 1921 cent, 21 and 0.20 cents, something like that. Okay. Now we see during this period here from 2008, what happened? We had the financial crash. Now I'm going to explain everything to you in a moment. You have to stick with me to understand this for you to get the history of what I'm saying. But what we saw here is a massive increase. Now, the key here is that every time there's some sort of financial crisis, okay, gold is going to over time increase in value due to inflation. When there's fears of inflation, people trade their currency in for gold because it will hedge their wealth against currency devaluation and losing their wealth. So we see right here, 2006, the price over here, 2008, when we had the financial crisis. For the next 3 years, due to the inflation and all of the issues that were caused by the financial crash, we had a very strong bullish movement. All right, this is the first cycle we had. Last cycle of something similar like this, you see that the close to the all-time high of what we saw in the 80s is where the price bounced off of to continue again. Now, at the moment, gold is in the same kind of pattern where we've seen the previous all-time high, which is here, form. We've had a financial crash in 2020, which was over here. The price has broken past this area and now is returning back down. And so that means that we're about to have another massive spike on gold, which means inflation is coming, guys. And with this Evergrande situation that we have, this may be the beginning of something that would turn out to be the trigger for a global financial crisis again. I told you that the 20s is going to be a very interesting time, and I want you guys to be well aware of everything that could potentially happen. Now, I explained this as quickly as possible. I could go into a lot more detail, but I just want to show you just one article just to discuss what's going on here and what this Evergrande situation means for the markets, okay? I'm not doing any deep analysis. I would prefer for all of you guys to look at what we've put out Sunday night, Monday morning, concerning the major pairs. And then you compare that with your own analysis to have some tools there. So I'm going to go over here and I just want to show you exactly what's going on. So the Evergrande situation, for those of you who don't know who Evergrande is a Chinese real estate behemoth, as is noted, a massive real estate company. Now, real estate is very central to China, especially in these last 20 years, because of China's system of how social care or healthcare, from schooling, all different things are controlled by where you live and where you were born. And this is one of the reasons why the Chinese market has been called a Chinese market bubble in terms of the housing bubble, because of the nature of how people are so aggressively trying to own a house. because where you live determines what access you get to the society, in essence. Now, Evergrande, which is one of the leading companies in China when it comes to real estate, has developed over 1,300 projects in more than 280 cities, and is the owner of Guangzhou FC Football Club. Now, they did all of this by borrowing over 300 billion, to be specific, $305 billion. And hear this, guys, from over 171 domestic banks, okay, so inland banks, and 121 other financial firms, okay? So Beijing implemented new rules that control the amount of money owed by big real estate investors or developers, excuse me. And this led to Evergrande to offer its properties at substantial discounts. So here's the trigger. In essence, Evergrande was trying to sell off properties at a very cheap price in this bubble just to be able to get money coming in to pay off their debt. Now, the company is struggling to pay their debt right now. And if this company defaults, this is important. If Evergrande defaults, it's going to have consequences outside of China. Now, the reason for this is, I'm going to put this here, is that China does business with basically the whole world, and Evergrande follows suit. Okay. And I want to read this part here from Matthew Bickink from the EIU, or the Economist Intelligence Unit, who outlined this very important point. The financial fallout would be far-reaching. Evergrande reportedly owes money to 171 domestic banks and 121 other financial firms. And so this is being classified as a credit crunch. If this company defaults, read this, guys, with me, its lenders, which are the financial institutions and banks, will be forced, or may be forced, I believe they will be forced, to lend less, okay, which means discourage borrowing, which means decrease spending, and increase their rates. If they do so, it's going to cost more money to borrow. Now, at the moment, because of COVID, central bank rates are at all-time lows, or close to all-time lows, due to the fact that they want to encourage the economy to recover. And because of this situation that we're in right now, this is going to produce what I would say is a catastrophic effect on the world. Already being beaten up by COVID with low interest rates, it means that many banks are going to struggle, which means a loss of jobs, the loss of a lot of things in the financial sector, and it will affect the asset prices that we are looking at also. Now, when it comes to Forex and foreign exchange, how could this affect Forex? If the rates of banks change, interbank rates change, okay, then that will affect many businesses and how they deal with their money and exchanges. So there'll be massive sell-offs of currencies for other currencies, because each company is trying to make sure that they don't get the worst rate, or they don't get on the bad side of even holding money in certain currencies. And so this is why I would say to you that when it comes to the Forex market right now and the dollar, this Evergrande situation, whatever happens, guys, in short, will affect the market very strongly. And it may be an overarching fundamental that we may see for the next quarter of the market. So I'm going to leave this link for you guys in the description below. I would definitely say, make sure you're prepared, because what does happen will affect us all. And I'll be watching carefully to see what happens. So coming back to the actual gold charts right now, inflation is definitely going to rise even further. All right. And if inflation rises, gold will definitely rise. At the moment, when I look at the chart on the monthly here, I'm keeping my eyes on this area of supply right now. The price has broken past this area of supply, and potentially we may have one more return. Now, in a moment of high inflation, I've told you that is proven. I'm not just saying this to just throw things out there. I'll see if I can actually find the link, but it's known that central banks or institutions that are hidden to most people's eyes sell off large amounts of gold when inflation gets very high. And the reason is, for one reason, just to discourage people from putting their money into gold, because it is common knowledge that gold is a store of value, and getting people to keep currency, which is a bad store of value and is always devaluing, opposed to gold, which will protect you, is what currency wants to do. Because if there's a lot of confidence on any currency, guys, major currency around the world, it's going to have crazy effects around the world. So we're in a very interesting time, guys, and I would advise you to be very wise with how you trade, not to be scared, If you don't know how to trade, guys, make sure you get good knowledge on how to trade. There's a free course in this link below on how to get yourself started. If you do know how to trade to a certain degree, then you want to make sure that you're keeping your eyes peeled on these kind of fundamentals, because these things do affect you and everybody around you. Now, at the moment, it looks like we have a reversal signature for the week, and gold is about to push long. Now, this may be a great trade for us, but before I take the long, I would suggest for all of you to look for a break in this market structure here. If we have a break in the market structure here, then the price can return to any of these price point levels here and give us a long. Now, my target for this trade right here, guys, I'm giving this to you already, would be right here at 1809, right above the high. I'm expecting the price to take the previous weekly high here. And if this is the case and we see this weakening of the dollar, then USD CHF, the rest might actually give us a short. So this is my trade, guys, I'm looking at. I'm going to leave that with you. You can take a screenshot, but it looks as though we're in a right place for an entry. And I'll catch you guys on the next one. So everybody, I hope you guys enjoyed this and take care.